what we tend to do, or what I normally tend to do, is always check any up-and-coming live or news that's about to happen. So this one about 3:15, that's 12:15, it's actually finished 4:30 Eastern Standard Time, that's 1:30 Pacific Standard Time. We got retail sales based on the pound, and then 7:15 broadband's gonna talk. We got building permits at 8:30 all the way to preliminary consumer sentiment. Then JOLTS job openings, normally they're not really on the red. People really didn't care that much, but it's the number of jobs opening during the reported month excluding the farming industry. Okay, so that's a new one in terms of the news. Okay, so what's happening right now, we have pretty much with the pounds. So that being said, normally in day trading or swing trading environment, even a momentum trading, multiple time frame analysis is really important, and you guys are going to learn that more when the time comes in the advanced class. I like to set up a good setup, or a great setup is simply when you have multiple screens. Actually, but two is more than good enough, but if you can have 3, it's also good. But 2 screens, in my opinion, is actually more than good enough. If you have one big 20-inch screen or even 22-inch screen, then that's actually great. So one monitor, I see you're having 4 different screens based on different times, like in terms from here. For example, I'll go through here weekly, then I go through a daily, and then a 4-hourly chart, and then a 1-hourly chart. Okay, so that's the ideal one for a swing trading technique, where you're looking at the actual trend on where is the positioning of where the current is heading, and then you're looking to slowly into a microscopic level, looking at the daily chart. Is it coinciding in terms of the actual trend within the week? So, but overall, like this one is on an uptrend. Even it's an uptrend on this end, but over here is having on a downtrend because of that week. 1 week has 5 trading business days, 2 weeks has 10 trading business days. So if you're just translating 2, 4, 6, 8, 10, this is pretty much what's happening on that 1 bar right there, and then this blue bar translates to these bars, and then that red bar translates to that. So there's a lot of components that's pretty much involved in terms of multiple time frame, getting it basically right. So if you're shorting in terms where the trend is to the upside, the probability that you're going to lose actually is really high, mainly more on a swing trading to medium, even to trend following strategy. However, if you're now looking at the daily, heading towards like a 4-hourly chart, where in one day there's 6 bars, candlestick bars per 1 day, so 6 times 4 is 24 hours, and then on 1 hour there's 24 bars or candles, right? So that's how basically it gets translated, and then it depends on the way how you see things based on the intent or the intention of the trade. This is where how we create the purpose or the intent of the trade. So since live trading is actually important to apply the theory in real time, in this particular case of 4:30, so we have what's 1:07 my time. I don't know what time is in yours currently in Australia, but 1:07, so it's now 4:07 Eastern Standard Time, so it's like 3. Like I said to you guys earlier, my time zone, I always put it on default based on Eastern Standard Time. Okay, so that means it'll translate. Anything got to do with the pound, you have the pound against the US dollar, the pound against the Japanese yen. So I'll go through anyway. Sorry, you have the pound against the Swiss, but I'll go through the pound against the US dollar. And you can see here, based on the weekly, even though it's an uptrend, but on the really short term, like on the week, the bears are currently in control at this point in time, but it's also reaching a level of demand, which not really a clever idea. And it's about 162.50 is pretty much the demand point of where buyers are supporting prices. And it's been pretty much 3 days in a row decrease in strength, so sellers are currently hesitant, and maybe perhaps there will be a probability that buyers will take over pretty soon. Looking at the 4-hourly chart, same thing, they're currently running out of steam, but we still have a bunch of lower lows. So for Julian, don't you worry, we're going to go through that everything in detail. But on the 1-hourly chart, we can see here that the bulls are trying to take over from this point in time, and we have a pivoting point, meaning that the low didn't want to go surpass the new low. So that being said, I'll go through now on the 1 hour, since we have a 1 hour of live trading right at this point in time. As of next week, the live trading will be categorized based on whatever strategy, so looking for a swing trading strategy or a momentum or day trading. So for this purpose, since this is a really good news, up and coming news, then we'll go through a day trading technique here. You can see here these are the two methodologies that you're basically using, but I tend not to use any indicators when I'm actually trading, because it's pretty much everything is in pure price. So 30 minutes, okay, and then I'll go through here 15 minutes. So from the bigger perspective, I'm just taking a piece of that big perspective, and I'm going to translate that into smaller time frames, all the way down to a 5-minute chart. The markets, they always leave clues, whether we like it or not, and like say at this right at this moment, well, the bulls are taking over. We have 8-7 seconds happening, so it is imperative to look at the times as well. 2, 1, 0, and click. Bingo. So there's here right at this point in time, what I'm gonna do is, since there's a good potential right there, even though this is actually a new one and we have a doji, part of the uncertainty, I'm going to translate that and just buy. Right, so here within the arrow, you can see here that because of the bid and the ask, hence it's still on the arrow point. Every candle, they have a meaning. So in the beginners class, we're definitely gonna go through the candlestick course by Steve Nissen. So this either purchase it via Kindle or paperback, and then once we finish pretty much the macro fundamentals by hopefully next week, we are going to start in terms of the basic technical analysis, and then we're going to go through each and every bar on what basically it means fully, objectively, and based on buying and selling. It's not just based on patterns, but what it really means based on price itself, based on supply and demand and buying and selling. Okay, now we have, if I go through, actually let me just expand this for now based on the hourly chart. Alright, I'll minimize this. I'll just delete pretty much everything right here. So what I tend to do is I need to find where my trends are. Obviously it's so clear that everything is pretty much on the downtrend. We have a series of higher highs, a series of lower highs. I'll cut that across, and then bam, that's pretty much on this end. I also wanted to know based on the lows, and you translate that 6309. 6312, so this low is definitely lower compared to that. So it's still a bunch of lower lows, right? And in this particular time frame, at least anyway. Okay, so we have that new low. So I can see here very clearly that between 63.10 and 63.12, there's a 2 pip difference in terms of a demand point. And then you have, there's a big range now between within the level of demand between institutional price point 63.22, 63.10. There's a 12 pip difference between the two. So currently in a good demand level, there's a low risk in terms of probability in losing 12 pips. However, since it's still pretty much in a downtrend, and there's no clear cut, there's going to be a breakout. What's giving me just the information is between basically this current low 63.10 and last low 63.09, which is about 12, between 12 and 1. So also from this perspective, see this high wave doji right here. There's a lot of different uncertainty. They don't know where to go, whether to the upside, to the downside. So, but as long as this low doesn't want to be trend, so doesn't want to go below, then it's fine. So within that low is 63.09. Added deduct minus 15 pips prior to that, 62.96. 62.96. Okay, just to be on the safe side. Put the stop at 62.96. Okay. I won't put a profit or a limit target as yet. Just want to see how the price is going to react in the next 15 minutes when the news will come. And if it chooses to go to the upside and will create some form of a momentum, then this is where I can keep trailing pretty much, and then either keep adding as a strategy or just let it ride until I see fit to reach that supply level. This type of trading strategy is now being implemented as advanced stuff. It is so basic. Excuse me. It is very easy. However, it has certain flaws in terms of complexity with the actual methodology itself. For Julian and Mike, there's two things in terms of supply and demand. So you have a demand on this point, you have a supplier on this point. How do you know it's a level of demand? It's very simple. When a price has been supported, where the price doesn't want to go any further, any lower than that, then a low price will be created. So that automatically means that some big institutional trading has been put into place. It can't be you, it can't be me, it cannot be a normal retail trade, especially in the currency markets where $4.1 trillion are floating pretty much every day in terms of an exchange of currency across the board. Yeah, I believe even if you combine all our monies together, it won't be enough, right? So, not even probably Bill Gates, even if he's a billionaire. I mean, you're talking here trillions of dollars, right? So, institutional pricing, all lows, and the lows are so important in trading. The lows and the highs. The highs are being translated as being resisted by sellers, meaning that when a price goes to the upside, and it gets exhausted, and when the price gets too expensive and there's no longer demand for it, then no one's gonna buy. Why? Because the price will be too expensive. So it's like buying a property, buying a house. You go to an auction house, and when you're looking into a property, all of a sudden the price gets to $1.6 million and your budget is only probably 1.6. Why? Because based on past data, the highest it basically just went is only 1.6375. So if you're buying about 1.637 0.5, then either you're spending way too much or you are creating or inflating the price. Especially when the price is dropping and it's going to the upside, it will take a lot of energy in order to do so. That energy will be translated out of what we spoke yesterday based on the news, that if the news will be good in less than 20 minutes time, so retail sales is important. So this is the change in total value of inflation adjusted sales at the retail level. It means that if consumers are not buying, then there's going to be a problem there, right? So that means now if the forecasted one is 0.5, and if the forecast will be greater, or the actual price or the actual report will be greater than the forecast, then there's the probability that it will go to the roof. Excuse me, but if it's on a negative note, then that's going to fail and it's going to keep on tanking to the downside. Sorry about that, excuse me. Okay, so now we can see through here that the price is heading to the upside. And if I translate to a bigger time frame, like a 4-hour chart, all the way to a daily chart, notice that for the past pretty much, well, yesterday we have a lot of uncertainty, the day before same thing, we have a lot of long lower shadows, meaning sellers were testing prices to the downside, and at one point in time those prices will be filled up anyway, but the overall trend on a bigger time scale is simply to the upside. Excuse me, not only that, every time it drops down to about the 163, it rebounds to the upside with the exception of this. Now the other thing that it's making us like feel good about is this low right here. However, this low also got broken, but this low hasn't been broken as yet. So in the bigger scheme of things, the bulls and the bears are just fighting anyway. So now if I go through a weekly chart, you will see there's an uncertainty bar right there. There's sellers trying to push the price to the downside at this point. Okay, what's happening in the monthly? Now the monthly, it's not over yet, but the bulls are currently in control. So the market cannot go just straight in a straight line to the upside. They have to correct itself. Okay, so now if it chooses to correct itself, then it can come back all the way down to 160 in the next couple of months. It all depends on what the market will dictate, right? So overall, the direction is to the upside, but there's a probability that it's going to correct to the downside. But right at this point in time, we want to see where the price is going to go. Now, here, very important aspect in trading. Let me actually move that here. So trend lines are important because they're like your guidelines in terms of like a railway line. So prior to it heading towards the supply, they need to break this trend as well, because it's like a resistance level, like a ceiling point. And if I translate that, this is simply an equilibrium based on supply and demand. It's just simply an equilibrium area. The mid portion is just simply an equilibrium between 2 points. And now if I translate this as well into indicators like moving averages, for example, then it's just, you'll see it very clearly if I put into a moving average. Based on the 1 hour, you'll see that it's just hitting within that equilibrium, right? So yeah, it's actually pretty interesting. Okay, now right at this point in time, We are currently at a profit, basically at 9.4 pips. So not bad for less than pretty much 10 minutes of trading, right? So let me add the time. So we got less than 7 minutes, 6 minutes 42 seconds in order for before the reports. So it's funny how even before the reports currently happening right this point in time, they're pushing the price to the upside pretty much already. So we need to be aware too, because institutions might just be doing a false way of pushing the price. It could be a fake out, trying to lure retailers in, and it's basically saying, hey, look, come on, buy me, buy me. And then after a while, when the news comes, bam, it just basically fails. So I've seen different funky trading systems, but there are also some good trading systems where they're saying, you know, if you get about 5 pips here or 10 pips a day, 5 pips a day, then that's more than enough. Yeah, that's good if you have a lot of capital and you're putting a lot of contracts, a lot of lots into there. So if you're putting at least like 10, 15, 20, you know, all of a sudden you're putting 100 lots of contracts, 100 times 10, man, that's a lot of money. That's like between 5 to 10, yeah, but 5 grand. You know, if you can make 5 grand in 10 minutes, then that's great. But if you live in the US where you have a 50 to 1 leverage, then you will need at least a $250,000, probably even $500,000 in order to get into that, right? All right, so there you go. It's looking pretty neat. Okay, let me now translate it back into this segment, so you can see here everything's coinciding in terms from the bigger time frame all the way to the smaller time frame. But here in the 15 minutes, of course, it's like 4, 1, 2, 30. 4 bars basically in one hour. Okay, so we'll wait. And it's not bad. There is currently 18 pips per 3. Right, so it's reached one level. What I'm gonna do is I'll just close pretty much one target point just to take some along the way. Okay, done. Right, now if I translate 35 minutes on this end, notice how 1, 2, 3, they're trying to push the price back a little bit. So just pretty much got a price at a really good supply level right at the same point in time. Now the danger point about sometimes about day trading, people who cannot control their emotions, and this is pretty much when you guys got assessed, is that when you see a red bar happening right at this point in time, people will start to micromanage, people will start to panic, even though the bigger time frame, they're still, you know, it's still looking pretty good, right? So bigger time frame will always have its hierarchy in terms of trading, so 4 more minutes before the actual report's going to come. What I'm going to do now too is going to trail my stop, since the first one has already been taken. Don't really want to give back some of the profits, or the profits that were already basically made. And it's almost, yeah, I mean, for me it's not currently a free ride, right? Alright, so we're just going to wait. Okay. Two more, less than 2 minutes, 1 minute and 50. Okay, so once a momentum has been established, and the chances that the probability will continue, especially when there's a lot of momentum and a level of demand. And notice how the size of those bars compared to the past previous ones were just so tiny. So that means that they're just waiting for the report. So like a doji right there, they're just waiting for a report. No trading at all. They're waiting for the market basically to open around this segment and this end, then 11 to 12, and then 12 to 1 my time. So it's approximately like 2, 3 o'clock in the morning Eastern Standard Time. Right, since we are now gonna sell it, I'm gonna change everything to the bid. Bingo. So there you go. See, the report came out. So voila. Now I can create that. Breaking out supply level. Goes to next. Going through major supply. Thank you very much. So what I'm just going to do is just to close another one position. Now the last trade is now just basically a free ride, right? This type of strategy I can just easily implement just leaving the trade now overnight, go to bed because it's 1:30 already my time, and currently just trailing it right now, looking at 64.20, 84 pips in the second trade, 17 pips first one, so we're up more than 100 pips pretty much. 64.24, almost close to 100 pips on the last trade. So depending on the news itself, sometimes it's really easy to make about 50 pips to 100 pips. The pound yen, probably that would have flown like through the roof as well. Okay, let's see what the pound yen, 71.36.33, so 103 pips. Bingo. So there it goes as well with the pound against the yen. So anything that relates to the pound yen is faster. And look at that, it's 120 pips from the point of inception. So let's stick to the pound against the yen for now, my pound against the dollar. 164.48. Okay, let me make that here. So notice how it broke through from the primary, secondary, tertiary downtrend. The next level is around the 64.50 area. Okay, what I'll just do is 164.48. Press OK, click, boom. So if it takes that, then that's pretty much the next. But looking at the size of the bar, where there's a lot of force, a lot of momentum compared to the rest, I have no doubt that the price can even go to about that 165 if it chooses to. But looking into that, that's pretty awesome. Looking at the euro against the yen, euro against the pound, for sure, euro basically tanked. Bam, see? That 83, 82. So it's pretty neat. Pretty cool, huh? You guys enjoyed that?
That was a very good trade.
Yeah, it's and this is why trading is easy. It's just a matter of reading it. But the question is how. They, like I said, they leave certain clues. It's also about timing. Does it happen quite a lot? I mean, you can get pretty good solid ones if you're being patient. Do we win all the time? Of course, absolutely not. But with the lowest risk, with the highest probability, then even if you lose three times in a row, and then with one big trade like this, then you're still pretty much in a profitable trade. But however, if you translate everything and you follow the system or the rules correctly, then this is where the probability of winning is actually really good. This translates to this is what we call a method 1 methodology. Method 1, which is basically an advanced stuff, can relate to any time frame, to any type of personality or any behavior of a person, to be honest. Then we have method 2, type of trading environment, where we're looking at a certain type of a pattern and a type of an oscillator, and then method 3, which comes in different hierarchy, because they go in hierarchy. So method 3 is this one right here, where there's just by pure luck, really. When I entered on a 5-minute study, it's just above the 8 or the 10 on a moving average, meaning that the probability that a new change of trend after a downtrend, that it's may continue to go to the upside, is highly probable. So those are 3 different methodologies. But like I said, the best one, simply that which I had to redo my trading style as well. It was learning this methodology. This is the ultimate methodology system, basically, that professional traders really use. But but once it translates to floor trading, of course, they don't see charts anymore as much. They analyze it, they forecast, and then part of that forecasting is simply once they're in the floor, is just to see the emotions of floor traders who will then trade, like let's say whether they'll be Goldman Sachs or a hedge fund manager or whatnot, and then to translate what they know, like what do they know that I don't know. And so part of the emotions involved. So it's a little bit easier to trade up the floor because you see the proper order flow. So that's pretty much live trading. Do you guys have any questions? I know there's probably tons of questions going into your head. How did you do this, do that? But nevertheless, it's just to demonstrate to you guys that actually it was a really good one today because of that report. Just to explain and to demonstrate to you in a live environment. This is not theoretical type of trading. This is live trading, where the most challenging part actually in teaching is to demonstrate a theory or a system where the market is actually ticking. It is easy to teach theory, like, well, you buy over here, you sell over there, then you'll make this. But the question is, how can you do the same thing when it is actually moving, even before it even happens? So other things that we do as well is simply, I don't know if I have it here, I might have deleted it, but no, it's on the other account. But nevertheless, as part of our teachings is simply the science of law of angles, which also you're going to learn that at the advanced class when you get there. they have certain laws or rules based on science that when price starts to drop or to a certain angle, then it will go as well to the upside with the same angle, and then it's just a matter of finding where the supply is. So like this one right here, I mean, it's heading to the upside very steeply. So, but when this drops, it will also drop very steeply. So that means there's opportunity to short this when the time comes once again, because with such a steepness, then it will have to come back to the same steepness until it will fill in what we call voids or spaces within the trend. Okay, so that's pretty much how we do things, and through law of angles you can approximately know when to sell it, at what particular time, how many bars. This can translate to a daily chart, a weekly or monthly chart. You could translate it even to as low as a 1 minute chart if you want to, but by the time you get to the 1 minute, it has a lot of frequency and a lot of noise, and you don't want noise. Alright, so that's live trading for you in terms of today's session. Any questions? Any questions? You would like anything to add to these guys?
No questions for me.
I'm sorry, this is about as good as it gets, isn't it? when you're showing people, you don't get a nice 1 hour bar like that very often.
Yeah.
Hardly any retracement.
Wednesdays are also good for momentum day trading, especially with when the Feds talk about 11ish Eastern Standard Time. Every week on approximately about Wednesday, Thursday, the trading times like at 4:30ish, because you have Europe or Euro, you have the pound, you have Swiss franc. They're the ones that basically translate in terms of this type of momentum day trading. Sometimes, I mean, last year we did a lot of live trading with the students because I want them to get up to speed. So look at that. So with the forecast 0.5, 2.6, that's huge, right?
Phenomenal.
Big difference. But like once again to to demonstrate with you guys that from here, when there's already some form of movement, these are institutional traders who already know what the report already is before the actual report even got out, because they have to buy at a demand level. So, that's why they leave clues. The market will always leave clues. Alrighty, then if there's no questions, you guys have a great night. We'll see you next week on Monday, and cool, enjoy.
Thanks so much.
Thank you.
See you guys.